Hello and welcome to Markets and Menus. Today's June 9th, 2026, and it's another daily market recap. What a crazy day it's been today, so let's get into it. So I posted a clue earlier on Instagram about with a picture of a bear ordering an extra large coffee, and I wonder who got that, what that clue was going to be about. But basically, coffee prices are plummeting, and this is in stark contrast to last year because coffee just kept going up, and I'm sure everyone felt that at places like Starbucks and there are other local coffee shops. But yeah, the cost of coffee beans being harvested around the world, and I think a lot of this has to do with Brazil. They seem to be having a good harvest. The coffee prices are going down. So hopefully that leads to lower coffee prices for you and I, since my wife and I absolutely love coffee, and we're very happy about that. But we will see. I know they like to keep margins high. So, but fingers crossed. Okay. So at around noon or one today, the market really took a nosedive, and the fear and greed index, which we talked about yesterday, slipped, you guessed it, even more into fear. So you have that 25 level, which is when you start to get into the extreme fear. But I have a feeling that since then the market's bounced a bit higher and has probably come off this fear level a little bit, but just another reason that to as a contrarian to like the market going more into fear, because that's a better time for you and I to add a little bit more of our savings into the market. It's a good strategy is to save up a little bit, and then once the market goes into that extreme fear, maybe you start adding a little exposure. So yeah, that it seems like the market keeps staying in this fear zone, which is good, a good thing. Another chart showing fear in the market is there are more bearish investors than bullish investors. At bullish investors, you can see there's 36.3% of all investors are bullish, where 37 are bearish. So this is another contrarian indicator that when there's more bears than bulls in the market, it's actually a good time to start adding money, because it's good to go against the herd, right? You never want to be going with the herd when you're investing, because you want to buy when prices are lower, and when there's more bears, there's the marginal dollar tends to go higher, so there's just more money to be bought into stocks than sold, just because of the amount of people that are not invested. So, right, if there's a lot of bears out there, there's a lot of people that are selling or not investing, and all those people that are sitting on the sidelines can re-enter. There's just more people to re-enter to drive prices higher. Another chart showing the fear. I was shocked by this. The second highest put volume in 20 years happened today, and you can see even during COVID, in 2020 there was not this much put volume. Now, put volume is another way to say insurance, buying insurance on the stock market. So a put contract is that you're betting the market to go down. So the more that put volume goes up, there's more investors betting that the market's going to go down. Again, a good sign for if you want to get in the market, because there's a lot of fear out there, and fear equals lower prices than there would be if everyone was greedy. So things continue to look like they're on sale. Just another friendly reminder about joining to be a premium member. Again, I have 30 to 40 positions in my portfolio right now that are all live on my website and app. that you could get exclusive access to, and also I will have videos up there of why I'm invested in these companies and their price targets. And then we could also set up some Zooms if you join to be a member. So lots of benefits to that, and I think it's a pretty good value with the pricing tier. So hope to see you as a member. Personal video. So this, I wanted to get a little more positive because I think that there are some myths out there with AI, and one of them I think is that it's taking young people's jobs. Sorry, typo there. So if you look at the unemployment, this chart, this is the unemployment rate of people who are 20 to 24 years old. And back in October, it went up to 9%, and it's actually come down to close to 7%. So, and AI has only gotten more advanced. So in my opinion, I think people are just learning more about AI, and just more jobs are going to be created from AI, and you're just going to see another classic shift, just like there was during the dot-com bubble. I think there was a lot of fear out there about jobs then. Same thing as today. I think just there'll be a shift in training and learning and adapting. And as you can see here, employment is actually accelerating into the second half of this year. This is another worry that a lot of the news, the market newscasters out there are kind of promoting, that the labor market is there's a big problem in the labor market. But if you look at payroll growth, the last 3 months, the 3-month average has been close to 200,000 jobs. I mean, so that line there, the trend has been up and to the right. So looks like employment for the second half of the year might be a surprise to the upside, which is good for the economy. Another employment chart here showing, the employment ratio is actually quite healthy. If you look at the past recessions in those shaded areas, the ratio has always been on a downward slope, and right now it's right at those levels of prior to COVID, even higher. So to me, that looks like a pretty healthy ratio and not very recessionary, which again is good for the economy and markets, because more jobs equals more income to invest, right? At the end of the day. And lastly, I wanted to leave everyone with this chart, because at the end of the day, when it's all said and done, the market's all about earnings. And the earnings for the S&P have been up and to the right, stellar. I mean, we're talking very fast earnings growth. Usually this earnings growth only comes after a recession, like a rebound kind of earnings trajectory. So we haven't had a recession, and the earnings are growing that fast because of things like AI, better technology, better productivity. And a lot of these things are very beneficial to the bottom line. So you're seeing profit margins at record highs, which is just going to continue to lead earnings to record highs. And stock prices follow earnings over the long run. So at the end of the day, cut through the noise, cut through the anxiety that the news fills you, and focus on the fundamentals and the signal, which I'm going to help you do every day. Have a good one.